Good morning, good afternoon, good evening, everyone. Thank you for joining us. And also thank you very much to all the contributors, both those who are on this panel today, but also many others who contributed to the Chambers Technology M&A Guide, which is in its second year now and available online on chambers.com. What we will discuss during the first session of today's conference, this particular panel will focus on trends in technology M&A. And so we'll cover a number of things. We'll look at some trends in the US. We'll talk about Europe, where Harald will be talking about Germany and EU more in a more broader sense. Dan will be talking about trends that he's seeing in Asia. And Ilya will be talking about trends in Ukraine, which is, needless to say, one of the most challenged markets and most challenged situations in the world today geopolitically. So to put things maybe in perspective a little bit to start this conversation, we saw 2020, 2021 as a boom market in technology M&A, probably one of the hottest markets in technology M&A ever seen. When the pandemic started, we all were thinking what's going to happen. And of course, technology industry as a whole benefited from a pandemic because people switched to using technology. We all started using video much more than we ever did before. That prompted purchasing of hardware by companies that, as people started working remotely, that boosted earnings for tech companies that are in hardware part of technology industry, prompted advertising and so on and so forth. We saw some of the groundbreaking IPOs, sky-high valuations, specs, de-specs, M&A was booming. So the incredible run in 2020, 2021. But what a difference a year makes, right? 2022 was a very different market in many respects. So the industry was facing headwinds, and not only the technology industries, general economy has been facing headwinds. There were fears of inflation. Central banks were acting on it, increasing interest rates. There was overextension of commitments by banks. So there was reduced availability of financing that led to major volatility in securities markets. And so we saw that there was a definite cut in purchasing of hardware by major buyers. There was cut in advertising. Technology industry got hit very, very hard. We've seen reduced earnings for technology industry. I'll give you some numbers. Out of 91, that's according to Financial Times that published a report just recently, out of 91 recently listed public companies, only 17 were profitable in 2022. And these companies burned through 12 billion in cash that they raised in IPOs because of drop in earnings, because of volatility. Valuations came down for high growth companies that went public in 2022, 2020 and 2021. Their valuation came down by about 70%. Blockchain crypto contributed to it. So M&A market overall was down by 40%, but technology actually was a little bit better than that. But what does it all mean for technology M&A? By the way, we will be posting poll questions to get your sentiment as to where technology M&A you think may be going, and there will be some other interesting poll questions. But what does it mean? Those are the type of things we will be exploring. Companies that were able to raise cash and burning through it and cannot still get to profitability, they need to consider what to do, right? IPOs markets were shut down, de-specs are not available, valuations are down. My prediction, and that's what we will talk, that probably M&A will be strong in 2023, not necessarily for good reasons, likely as a defensive move by many of these companies. But I'll open it to the panel, and let's go around the world and see what people are seeing and doing in different parts of the world. Harald, maybe starting with you, Germany, Europe, what do you see? What do you think the current trends are?
Yeah, many thanks, George. As you already indicated, we are in the middle of extraordinary times, still dealing with the aftermath of the pandemic. We see geopolitical conflicts, in particular the war in the Ukraine, supply chain challenges, increasing level of inflation, concerns of a recession since the third quarter of 22, just to name a few. In Europe, actually, the market cooled in line with what you just described in 22 after a record-breaking period of a number of years. When talking to bankers and to clients, it is expected that activity will normalize at a lower level in 23. And the third quarter, 22, we really saw a true cliff with roughly 8,300 deals year to date, totaling around 845 billion euros, resulting in a drop of 14% year on year in terms of deal volume and 16% decline in deal value. So that was quite a shock. But even in this overall challenging market in Europe, M&A activity and the TMT sector in 22 showed a continual high market activity compared to 21 and also compared to other industry sectors. UK and Germany were the most active markets in Europe, and actually the same is expected for the year 23. Technologies is expected to lead the bunch in M&A deal making, with financial sponsors, for example, trying and eager to get hold of tower assets. That already started in last year with, for our standards, the biggest transaction was the Brookfield acquisition of the 51% stake of Deutsche Telekom's tower asset. We would expect that those kind of transactions will increase because independent tower cos, as they are called, are in Europe relatively small, 35%, compared to a rate of 95%, for example, in the US. And so that there was much more deals expected in that area in order to realize capital efficiency attached to sharing this infrastructure. Fundamentally, there are several factors relevant for the prospects of tech M&A in Germany and Europe. Obviously, there is a growing environment for thriving tech businesses and innovation of new technology-based business models. We like to refer to our little success stories beyond tech. Obviously, the vaccine, which is distributed under the name of Pfizer, but we are very proud that it's a German little Mainz-based company. SoundCloud, Zalando, HelloFresh, Flixbus, just to name a few. Maybe even more important for tech M&A are the effects of digital transformation requirements of established businesses. The accelerated technological change and emerge of new digital business models is a challenge for companies. They need to adapt in order to meet customer requirements, and the fast pace of digital trends is really requiring external digital expertise. Those companies need the technology, the know-how, and also the people, actually. That is pretty much true. And there are many attractive targets available. So we would expect that there will be in the EU and in Germany a real number of activity in that sector. And finally, just one consideration, technology will also play a key part in respect of achieving ESG targets and to be ESG compliance. So that would also be something we would expect will flow into the M&A market.
Thank you, Harald. Very, very interesting. Maybe switching to Asia. Don, Asia obviously is a vast region, right? So we'll need a number of days actually to discuss all the trends in Asia. But taking it at a very high level, what you are seeing in Asia.
Yeah, so I think what we're saying in Asia is very similar to global trends, where you had record-breaking M&A activity, especially in the tech sector in 2020, 2021. And then even through the first half of 2022, there was robust activity, and then sort of a cliff from the second half of 2022, kind of continuing to today. And I can speak about my jurisdiction, South Korea, first. Again, I think the total M&A deal volume for 2022 was about $65 billion, which was about a 40% drop from the prior year. So
consistent with global, yeah.
Correct. So all these same factors, all the headwinds such as interest rate hikes, geopolitical tensions, and inflation, and so forth, all of that have had an effect on M&A activity, as well as the strengthening dollar for outbound activity for Korean companies. Now, because 2021 and 2022 first half were so robust for a lot of tech companies, a lot of them were planning for IPOs, and a lot of them through the second half of 2022 have been put on hold or dropped entirely. So it's caused a lot of concern and restrictions on founders and investors to exit their investments that they've been holding for quite some time. Now, having said that, I think there will be sort of other ways, and I would think that M&A activity will be another way for exits to happen. But overall, the tech landscape in South Korea is very robust. In all of Asia, it has really emerged as one of the hubs of innovation and development. There's a lot of R&D happening, and in fact, and there's more of a stratification of the market participants in the tech space. Traditionally, it was dominated by major conglomerates like Samsung and so forth, LG. But now you are seeing a lot more mid-tier tech firms, as well as a lot of startups and VC activity. And while I think the prevailing view is that we have certain current headwinds, but that eventually it's a matter of when, right? Not if. And so there's a lot of capital that's in store for investments. So I think all of those will come to play. And I think the major thing will be really inflation and interest rates. Not so much the fact that there will be hikes. It's really people are looking for some sort of stability and predictability.
Stability. Yeah.
Right.
Yeah.
So I think that's what is weighing on minds of investors as well as founders, et cetera. But again, you have all the various sectors and industries, from AI, autonomous driving, to electric vehicles, cybersecurity, device manufacturing, software. All of those areas are very active, both domestically and in terms of outbound. And we are seeing a lot of interest from foreign investors looking at Korean technology companies and so forth. Japan is sort of its own world. They have not been so influenced by interest rate hikes. And I think the tech scene there, I think, is fairly active. And really, I think most of the Japanese companies that we interface with are looking for outbound investment opportunities. And then China, again, I will kind of skip on China because it is a very vast sort of market. But Southeast Asia, I think, is a really interesting area because places like Singapore are obviously very developed in their tech infrastructure, as well as their tech investments, companies, et cetera. Internet penetration is extremely high. But you look at other jurisdictions like Vietnam or Indonesia, Malaysia, and sheer population-wise, it's a really promising area. And you are seeing, interestingly, a lot of tech M&A or investment opportunities, first of all, in the financial sector, as well as in sort of the more consumer type areas such as ride hailing and food delivery, et cetera. And I think it's really, within Asia, it is a very attractive investment destination. And we certainly expect to see those jurisdictions to garner a lot of interest in the next coming 5-10 years.
Thank you, Don. Very, very interesting. Ilya, turning to you. First of all, obviously Ukraine is in the middle of this horrendous war, and so needless to say, not just economy is disrupted, everything is disrupted in Ukraine, and people are suffering beyond anything that anybody could have imagined. But talking about technology, what many people did not realize, and probably learning more about Ukraine now during the war, that the tech industry in Ukraine is one of the strongest in the world, actually, a destination for capital, tech companies, Ukrainian startups going abroad, listing on major exchanges. M&A activity involving tech companies in Ukraine has been quite significant. Notwithstanding the disruption and the horrendous situation currently in Ukraine, can you talk about IT industry in Ukraine, what you are seeing in the current trends, maybe before the invasion, now during the invasion? What are you seeing? Ukraine is often referred to as brains and grains, right? And brains go to actually, in many respects, to the highly educated and sophisticated people, particularly in the computer science and IT. So to you, Ilya, and thank you for joining us. I know this is not convenient even to find the proper Wi-Fi spot in Ukraine these days. So I'm so glad that you could join us.
Yeah, thank you, George. Indeed, a number of big names in tech industry have Ukrainian roots. And before the war, I would say that Ukrainian tech market was merely the same as European or American market, showing quite good boost in terms of the development. And even though we still have the war, the results of 2022 shows that IT sector is still in growth, even despite all the interruptions we had. And this became possible thanks to large players on the market, which had sufficient financing to survive the hard times and to use their potential to continue the growth. It may sound a little bit strange, but the war boosted the development of certain IT projects like the one in the military area. Indeed, many specialists channeled their efforts to develop defense projects. I give you an example of a startup that, for example, before the war developed the drone management software system for peaceful purposes like field aeration or delivery of goods. And after the war, they switched to more military purposes. And the same did a number of other IT companies that managed to adapt their technology to the current needs of the country. Here we can say about the reporting of damaged cars, delivery of humanitarian aid and medicine, delivery of food, informing civil defense alarms, and many other directions where we see the development of IT technology currently in Ukraine. In terms of the M&A, of course, 2022 was a total drop in Ukraine. We have had a very few transactions involving technology companies, mostly structured outside of Ukraine for obvious reasons. However, since most of technology companies have resumed their activity and showed certain growth in 2022, we stay optimistic in terms of the recovery of M&A market.
Thank you, Ilya. And I would add that you're just talking to Ukrainian friends, it sounds like digitization in Ukraine is actually at the forefront. Many other countries, what I've heard, are actually trying to emulate, looking at how Ukraine digitized economic, social, personal life for people. DIA that people are using on their phone, the software that pretty much has everything, right? It's almost futuristic in many respects. Some Ukrainians are telling me that when they're coming to Europe or the US, they feel like they're backwards because they do not have access to the same technology that they have in the country. So fascinating. Thank you, Ilya. Maybe then switching a little bit our topic to, in the current environment where financing is challenged, right? It's very difficult for young companies to raise funds because equities markets are challenged, financing through banks challenged, no de-SPACs. So looking at where funds may be coming from, and maybe talking about how in different parts of the world startups get support. Don, maybe starting with you. South Korea has had a long tradition of supporting young startups. And there were initiatives and actually a fund launched by the government, right, to promote and support startups. Can you talk a little bit about, how this is handled in South Korea?
Sure.
Are there opportunities for foreign investors as well, but mostly, these funding opportunities for young technology companies?
Sure. So the public-private partnership in funding startups and early stage businesses is very well established, as you mentioned, George. And it's a great area of interest. And, there are certain political reasons for this, because with, the younger generation, a lot of them either don't feel as though it's desirable to join, for example, the traditional large conglomerates, and they want to try something on their own, or just in the public imagination, the thought of having a very successful startup is very strong. So the government has provided, as you say, a fund. It generally is an LP that invests in a fund of funds, and it will also have matching programs for other investors to come in. But really, it's to provide those funds for startups. And there's no real preference for a particular industry, but it is still heavily geared towards sort of the tech and sort of the bio space, healthcare. Now, the government also provides a lot of resources in terms of providing, networking opportunities, linking startups to experts, providing them access to foreign resources as well. Also, really encouraging incubators, accelerators, and so forth. So, if you are a startup, I think. All startups will have difficulties, but in terms of procuring funding, even in this current environment, I think it's compared to other jurisdictions very favorable. And financing, the government also is thinking of providing very low interest rate loans, basically, to startups, and also providing a lot of tax incentives. So lower tax rates being in certain tax benefit zones, or if you are a seller, if you sell and reinvest in another startup, there are tax benefits. But in an environment where profits are challenged, it's questionable how much the tax incentives will really be of help. But the general tenor is that the government, especially the Ministry of Small, Medium Enterprises and Startups, they are very active and very supportive.
Very interesting. Thank you, Don. Ilya, talking about Ukraine, I understand Ukraine also has similar initiatives sponsored by the government to support the technology industry. Can you talk a little bit about this and also talk about opportunities for foreign investors? Obviously, challenging to do it during the war, but there is a lot of interest. Talking to investors, I know in tech industry, there's a lot of interest actually in investing in tech startups, young technology companies, even more mature technology companies in Ukraine. I've been asked to speak to Ukrainian business community how to position Ukraine for foreign investments. Can you talk a little bit about the combination of government support, development, and foreign investment opportunities?
Yeah, sure. Well, actually, for the last 3-5 years, Ukraine has made a number of significant legislative improvements aimed at development of local IT business, as well as attracting foreign investors. One of such novelties is the creation of so-called DSCD, which is kind of legal and tax regime for IT companies and startups. Actually, it was launched in February 2022, so 2 weeks right before the war. And the idea was to use the best practices taken from different jurisdictions like Delaware and Singapore for simplification of the procedure for creation and management of the business. IT business, IT companies. Also, this regime gives an exceptional tax preferences for the residents of the city, which stimulates further development of the business. Finally, this special regime introduced well-known English law instruments which have not been common for Ukraine before. I'm talking actually about very common things like convertible loans, representation warranties, liquidation preferences, and other instruments. All these efforts are made with the sole purpose to create favorable environment for the development of technology, business, and this is actually only the beginning. We are continue working on the creation of standards for M&A documentation, for investment documentation in terms of the support of IT startups, additional instruments for structuring of the financing. This is all in process, but the first and the major step is already done in terms of the government. Of course, the war changed the situation, and now the startup level is the most vulnerable one. So the state adopted the program for the support of IT startups in Ukraine and allocated a significant amount for support of the startups. The same was done actually by EU, which launched a 20 million program to support IT community in Ukraine. And we see that this trend was also supported by international giants like Google, who created their own funds to support Ukrainian IT startups.
Thank you, Ilya. Harald, you talked about innovation a little bit. Germany has one of the most mature technology industries in the world. Can you talk a little bit more about innovation and how innovation is funded and supported in Germany, current trends that you are seeing, opportunities for foreign investments and so forth?
Sure, George. Obviously, for Germany, transformation by way of technological innovation is key. We are really not famous for commodities anymore, and our workforce is much too expensive compared to other places in the world. Hence, we need to be innovative to be successful. And just look at the automotive industry, which is the backbone of the German economy for decades. Yeah, the challenges we are facing and the transformation of this industry, particularly with respect to electric vehicles, autonomous driving, you name it. Yeah. So innovation is needed a lot everywhere, ranging from the DAX 40 issuers to the famous German Mittelstand, and some of the issues are really how to get innovation, but maybe even more important, how to retain innovation. Obviously, there are two different tracks to go. One is being innovative and building new business models in-house or acquiring it by external expertise. We have in Germany a busy and active investor scene in Germany, providing venture capital, including specific venture capital funds, corporate venture capital funds. They are super active because they know that this is their way to get access to innovation, as well as government-sponsored funds, pretty much the same as mentioned by Don. I think the German government knows that we need to be super active there. But also, to be fair, and that's also something Don already indicated, it looks like that young talent is more fascinated by going startup rather than the idea of joining big companies, with all the monitoring and controlling rules and procedures and so forth. So that typically a lot of innovation first goes into the startups, not really into the R&D divisions of big companies. When it then comes at a certain point in time to getting hold of that innovation by, for example, tech M&A, so the big corporates are trying to acquire those young talents and the know-how, the technology, and so forth. That's not coming without significant challenges. Obviously, the cooler the technology is, that will have an impact on pricing, so it's not really cheap. The second thing is really an issue of post-merger integration. And we have seen that a lot, that companies have tried to acquire for a lot of money technologies, the know-how, and actually the people representing that know-how. And then there was a certain cultural clash afterwards. And so clients really should think about that in advance in order not to mess up the whole transaction idea. So when trying to integrate those innovative digital natives into big corporates, if the level of integration is too high, there may be an impact on the retention of those people, and thereby the level of innovation moving forward. If, on the other hand, the level of integration is too low, and we have seen both kind of strategies, if it's too low, then the innovation may be okay, because those guys can, within a bigger group, do their own thing as before, and they are happy. But the benefits of the innovation, because of the low level of integration to the overall institution, may be limited. And also you may face issues that other groups, employees, stakeholders within the company may become very unhappy about the special treatment of those acqui-hires. So that's a true challenge. So it's expensive on the front end, and there will be significant issues post-merger integration in order to keep it and to make it a true success.
Yeah, it's very, very interesting, Harald, right? Integration is key to M&A deal, right? Often M&A practitioners think about the deal itself, right? But it's really the integration that ultimately either makes the value justified, what you pay for the business you're acquiring, or not. And it's how do you strike that balance between, for technology companies in particular, between making sure that you integrate the business you are buying, but at the same time not undermining the innovative nature of the young company, young technology company that you are buying, and not driving people out. So how you strike that balance is probably one of the key issues in M&A deals. Let's talk a little bit about some specific deals we're seeing in the markets now. Maybe touching a little bit more on what I mentioned at the outset of our conversation. In the US, what we're seeing is that there are several aspects that I believe will be driving M&A markets in 2023 and the type of deals we're seeing in the markets. One, it's the fact that valuations came down, right? Valuations came down. Some of it because they were too high, some of it because earnings actually significantly came down, some of it volatility in the markets, but one way or the other, valuations are down, as I mentioned, for high growth companies by 70% actually. So which means it creates really a buyer's market, so long as the seller is willing to transact at those levels of value. And so buyers have opportunities, but buyers are concerned at the same time in the current market environment, in the current economic environment with major disruptions, to pull the trigger and actually do the deal. But there will be opportunities. And so if people can agree on valuation, that's going to be driving it. On the young company side, some of the drivers that I'm seeing are the fact that companies, those that raised cash, are burning through cash. As I mentioned, $12 billion were used by companies that raised that money in the IPOs during 2020, 2021. And so running out of cash without easy access to either debt financing or equity financing may push companies actually to consider an M&A transaction or consider taking significant private money into the company. The other thing that we are seeing is that those companies that went public or have been public for a while, they are considering, going private. So that you take the company off the radar screen and the focus that public companies face. So going private transactions, significant private investments into companies, those are the type of trends we're seeing. And traditional M&A. Also stock for stock deals, probably we will see more of them in 2023, because needless to say, for M&A practitioners, right? You can do stock for stock deal at high valuation, so long as both companies at that level, or at low valuation if the market is down, so long as you overcome volatility. So those are some of the things, some of the types of deals we're seeing in the U.S. market. So Harald, maybe staying with you in Germany, what are the types of deals you are seeing these days in the German market? VC financings, IPOs, de-SPACs, spin-offs? What are the most typical deals you're seeing in the market?
Actually, we already touched upon, we have a robust venture capital industry, which is obviously important for our scenario here, innovation, digital business, and so forth. That is backed up by early stage financing, government sponsored programs, business angels, early stage investors, family offices, all a bunch that in that sphere. On the listings, on the IPOs, obviously that's in general a very nice way of arranging for an exit. And we all know that already in general times there are the peaks and the downs, in view of the well-known IPO risk, volatile markets, level of appetite of investors, the listing rules, and so forth. Now, it looks really bad. When talking to ECM bankers, they hope for a couple of mega IPOs in order to make good for the year, because they do not believe that there is no confidence in a significant number of mid-cap listings. We saw in the tech side earlier this year, Janos, that is a subsidiary of United Internet, a leading web host, specialist in cloud solutions and so forth. Already very disappointing opening price, 1845, and it dropped. And I think yesterday I checked it, it was something like below 16 or so. So that is a more pessimistic or disappointing view on the IPO market. Yeah, typically now investors are even more critical on how issuers plan to protect margins. That's pretty clear. And the better the quality of the business is, the more flexibility the owners have to fine-tune timing and not to run into something just because of the cash needs, George, you just described. Typical other IPO candidates which are discussed in Germany include Schott Pharma, Stepstone, this classified arm of Axel Springer, Ukera, that is ThyssenKrupp hydrogen plant manufacturer. Coming to SPACs, we also had a little SPAC wave, not like compared to the US, but this is totally done. There are no de-SPACs anymore, and more investors are going to withdraw their capital. So I think that's for now.
Same in the US. Yeah, same in the US.
Spin-offs and auction sales obviously have been a very dominant transaction route in Germany and in the European market, and that will continue to be the case. I think it will be more problematic to have these kind of bread and butter auction proceedings. That will probably be more of a problem. Financing, also that has been addressed earlier, has become obviously more of a challenge. So in that respect, we will also see more bilateral transactions compared to other periods. Financing deals will become more problematic for the largest deals to the extent they rely on liquid debt capital markets. Smaller deals obviously are less affected because there are well-capitalized direct lending funds around willing to deploy senior loans for buyouts. But really the big ticket thing, that will be more of a challenge to put together the respective financing. On the corporate side, money in general is available. It's more an issue of valuations, and as you said, they are coming down. The issue is whether they come sufficiently down in order to make it attractive. A lot of people say that M&A deal makers will be much more focused on few targets, but those targets will then be pursued even more vigorously. I think generally, given the overall cornerstones of the requirements for the technology transformation in many industries, there is really no chance for deal makers to come to a break. They need to make sure that they're not missing the train here and identify the relevant targets, obviously also for the relevant prices. So overall, cash-rich corporates will get their opportunities as well as well-funded PE funds. Multiples are expected or are going down, yeah, but nevertheless, people need to be very careful and diligent in finding the right targets, and then I think that will also translate in a number of opportunities.
Thank you, Harald. Dan, how about South Korea? So what type of deals are you seeing most these days? Is it outbound licensing? What are the most what are the deals that you're seeing the most in the market?
Yeah, so I think this period of time, and also in speaking with my colleagues, is really sort of unprecedented in the types and complexity of deals. So there's really, because your liquidity exit through an IPO is limited, and financing is not so available, they're really trying to come up with creative solutions for those who are looking for an exit to accommodate that. And for example, for public companies, I think sort of pipes deals are being looked at a little bit more, as well as in the private context, similar arrangements with convertible instruments, where the buyer really can get a good deal. But still, as you mentioned, George, there is a valuation gap between sellers and buyers. So I think trying to overcome that is really difficult. But for some companies, a lot of it is sort of restructuring oriented. So there's a lot of divestitures through a normal M&A process. And in the sort of early stage or mid stage companies in which, and I forgot to mention this, the corporate venture capital environment is very robust here because a lot of the conglomerates, they want to try and diversify. And especially because these corporate conglomerates, now you're coming down to the third generation of the families, and they are a little bit younger. They want to try different things. So you see them doubling down on some of their investments into startups. So you see those types of transactions quite a bit. A lot of outbound activity, I think, for larger companies in the tech space. They view the Korean market as being too small or saturated, and they really are looking to build outside, especially in places like the US that may have tangential technologies to electric vehicles, such as batteries. So a lot of greenfield type investments in the US. But that has also been kind of put on hold and because of the currency headwinds. But the Inflation Reduction Act is very attractive to a lot of Korean companies to build out sort of tech-related assets. And in terms of foreign funds and foreign investors, there is a lot of interest, but they are very strategic. So they're looking for particular technologies, and in those cases, certainly licensing, and also in the CVC cases, they are very, very interested in receiving a license to any technology developed by their invested companies, especially in biopharma. So I think you are seeing that, but at this point, it really runs the gamut and people are being very, very creative to seek opportunities to invest as well as to exit.
Thank you, Dan. Ilya, how about Ukraine? So what type of deals are you seeing now, and what you've seen before the war? Is it more investments into the country, into tech companies there, tech companies venturing abroad and doing an IPO outside of Ukraine, or an M&A deal outside of Ukraine? What are the trends you are seeing?
Well, I would say both, depending on where the company is at its development, because actually the financial market in Ukraine is not that well developed, and thus the access to the financial resources is rather limited by the local players. So for those companies which are relatively big and may allow themselves to have the international structure, they of course would try to also seek for the international financing using all the instruments of European or US markets to get it either through IPOs or other means. For those which are at early stage of financing, which don't have the international structure, they're basically tied and limited with those local aggregators or local remedies which are available. And of course, we have international foreign venture capital funds which are on a permanent basis looking for the good targets in Ukraine. We have Ukrainian venture capital funds which are again looking to pick up the best IT companies. But again, in terms of the technology companies in this case, they are more bound by the proposal they receive from venture capitals than the situation where they are able to dictate the rules. The same refers actually to the exit rules, because those who already constructed the compound international structure, they would prefer to exit outside, and those who are in Ukraine, there is no other choice as to do that. And in terms of reward trends, we see that even those IT technological companies which were present purely in Ukraine, they are trying to build up the international corporate structure abroad Ukraine just to diversify the risks. And when they did that would mean that in case of the exit or seeking for the financing, they would use it, which is absolutely normal and logical in this situation.
Thank you, Ilya. We have just a couple of minutes left for this particular panel discussion. So if I may ask you guys, taking the crystal ball and kind of looking in the crystal ball and trying to predict what type of M&A activity you will see in 2023. And we have a poll actually for everybody who is participating in the conference to get their views, but for the panel. And I'll venture first, as I mentioned, I believe that M&A market in technology will pick up in 2023 and going to be strong, sometimes for good reasons, sometimes for defensive reasons. Because companies will need cash. So, but I expect that the market will pick up, particularly in the second half of 2023, but maybe even earlier. So, Harald, your view on Germany and Europe more generally?
It's very
crystal ball.
It's very difficult, George, just to not agree with your assessment and outlook. Maybe we have the same crystal ball in our trunk. I think that's right. I think tech M&A will be an important driver for M&A activities overall. And that is because the world is changing and technology is the center part of it. Number two, I think, is volume of deals will largely depend on availability of funds and financing. That is the general theme. And what I also, when I look deeply into the crystal ball, I would also think about, interesting to see how ESG will be a driver for technology in order to make them achieve their trends. I think that's something I would like to think about a little longer, and because that will come to a very important stage.
Thank you, Harald. Dan, in Asia? Yeah, I think I share George, your view as well as Harald's view. Like I mentioned before, it's not a matter of if, it's really a matter of when. I think everybody in the M&A market really they see tech M&A as the area to be in. And I think that's true for most of Asia. And so this really will be the bright spot. And you'll continue to see the industrials and chemicals M&A space being active, but really I think we are on a path of a digital economy with innovation being really at the backbone. And for a country like Korea, where it produces content as well as technology, and it will really heavily focus on technology, tech M&A will be the theme going forward, and I suspect it's going to be the same for most of the Asian economies.
Thank you, Dan. Ilya, and your crystal ball probably the most challenging. I'm confident that Ukraine will win this war. What's your view in 2023? What likely gonna be the environment for investments? By the way, our hearts and minds are with Ukraine, and we're standing strong with Ukraine throughout this period of war. But can you talk a little bit about what you expect in 2023?
Yeah, thank you, George. I really hope that I will be able to share the optimism of Harald and Don in terms of the development of technology market, because Ukraine has a great potential. We have incredible examples of Ukrainian technology companies being developed into international one, showing the perfect results. I see that we have a lot of potential for new companies to do the same. Technological market was not hurt by the war compared to other markets, so I believe that it will show better recovery than other sectors. So I'm keep positive in terms of the perspective of M&A transactions in Ukraine, of course, as a part of Europe.
Thank you, Ilya. Thank you. And again, we are standing with the people of Ukraine. We're confident that this horrendous war will end with the victory. Thank you for joining. Yeah, I know how challenging it's been for you to join. And this wraps up our conversation. Thank you very much, Harald, Don, Ilya. Hopefully everybody enjoyed our conversation. I certainly enjoyed this conversation with the rest of the panelists. And again, thank you very much to everybody who contributed to the guide. There were a lot of contributors who we could not have with us on this panel today, but we'll try to do it in the future. And hopefully everybody who has seen the guide enjoys the in-depth discussions of technology, M&A trends, how funds are raised, how deals get done in the Chambers guide.